Hello everyone, the chart guys have been working on an introductory technical analysis course for some time now, and after surveying hundreds of traders, we narrowed down what the most sought after information was, and we created this course, Entry and Exit Strategies. It's over 5 hours in length, and we go over different signals that the charts tell us for when to buy and when to sell. If you are the kind of trader that is still looking at charts and not realizing what it is trying to tell you, still feeling a little bit overwhelmed, this course is designed to alleviate that uncertainty. So the course outline, we're going to go over the psychology of trading, establishing a game plan, recognizing the different indicators signaling bullish and bearish entries, being able to identify support and resistance levels, poor entries where traders make mistakes and how to avoid them, exit target, knowing where to sell your positions, where to place stop losses to keep those losses minimal, my personal preparations, how I get ready for the trading day, and then piecing it all together, looking back at everything we just learned and applying it to the real world. As a bonus, we'll also look at an intro to finding entries and exits with patterns, and you'll recognize these patterns on all kinds of time frames throughout the stock world, so certainly beneficial to be able to trade off of those as well. So we hope you will check out this course, and again, we feel it will build a foundation of technical analysis knowledge that experience will build off of and send you on the right direction to making more profitable trades. Checking in on Facebook on the daily and weekly time frame. So the bulls did backtest and hold the 200-day moving average support of 119.88. We did get a higher low and a higher high as well, but it's an indecision candlestick. All in all, though, Facebook bulls have to be pleased with the amount of the pullback we saw in the overall market in reaction to the Fed today. So the backtest and hold of the 200-day moving average is key. We also bounced the low of the day right off the middle Bollinger Band of 118.77. So the bulls need to hold these levels going forward and try and break this tight pattern. And it's a tight pattern because we have our low, high of the bounce, higher low, lower high, tightening range. We have to break 122.98 for the bulls. And if we break 114, it is a bear break. So we're still in that range. We could be in with this range for another week or two. But tech names held up pretty well compared to the overall S&P 500. Bullish break of that inside candlestick on the weekly time frame still stands, but we're still struggling at these exponential resistances on the weekly, and that 8 period is at 120.68. And if the bulls can get over that 122.98 level, they will be looking strong with a higher low and a higher high, and then that middle Bollinger Band on the weekly will be the next resistance we look at. So checking in on the shorter term time frames, Facebook bulls were in control the vast majority of the day until that Fed decision. Nice higher low and higher high out of the gate. And then we consolidated, tightening range. There's the low, lower high, higher low, lower high, tight, 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 bear break. And the bear break occurred at 150. There's a little heads up. So a tight range broken for the bears before the Fed ever did anything. Then the Fed comes out and we see a huge dump all the way down to 118.85. So we didn't get this little heads up. Let's actually double check that. SPY. S&P 500 did not get that heads up of bearish action, and we saw bullish action right after the Fed announcement. So Facebook was a nice little heads up, and the tight pattern broke for the bears right before the announcement and then right before the dump. And though we did see a higher low and a higher high bounce at the end of the day, and we did not see that in the S&P 500. So that's how we know that Facebook had a nicer recovery by forming that higher low and higher high into the close. So where do we stand on the hourly time frame? Pretty much back testing and rejecting that 20-period moving average resistance. We bounced off of it at the low in the morning. Then we lost it. 1-2 rejections at the end of the day. So we'll be looking at the 100 and 200-period hourly supports and the 20-period hourly resistance tomorrow morning. But all in all, the tech sector holding up better than a lot of other names. And we'll see if Facebook and Apple and those Google, if they can all hold up again tomorrow in similar scenarios, if the markets are that weak. So we'll see if the 200-day moving average can hold. That's the goal for the bulls, and looking to close above the high of the weekly candlestick last week, which was 119.94. That's the ideal close above that level for the bulls with 2 trading days left to go. Thanks for watching, and we'll check back in tomorrow.